All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Friday, June 7th, 2019. You're getting the report in the evening today. I'm going to have a really busy morning and I might be traveling, so I want to make sure I get it out. Two trades today. Let's talk about why that was and also why I didn't lift the TZA position. If we look at SPY here, we've had a nice run here. We're coming into resistance. Now, I could have waited for resistance to clear and see if it clears tomorrow or maybe clears next week. But there are some good risk reward opportunities in some other areas. So I think it's okay to get in those. If the market pulls back, we take small losses. Plus, we've left the TZA position on. So that helps hedge some of this here. So overall cues here, I still want the break of the 50-day moving average. We still know we're in a kind of geopolitical environment where we have China news and we have some other stuff. And then we have this volume pattern in here as well. Nothing changed today with regard to that. And the cues here, now notice the positions I took are more sensitive to the cues than they are to SPY with FSLR and Apple. And if we see here, and also the sock sell that I'm in right now, we have more room till we hit resistance on the cues. So there is more room here before we butt heads, basically. And then IWM, I like the fact that IWM is maybe showing a little weakness than the other areas because I'm in TZA, basically. Otherwise, really in a good market, we want this to show a little more strength. What's interesting here, though, is we've got a lot of mixed signals here, which makes it a little tough to just pick one thing to do. If we see here, look how ugly the volume pattern here is on SPY, but the price action is better. Whereas on IWM, the price action is worse, but the volume pattern is actually not that bad. Red has basically just kept even with green, or just maybe a little higher, where it's SPY, there's been much more selling. So interesting stuff that makes it a little more, the degree of difficulty a little higher than we'd like. But current positions here, so I added, first of all, let's talk about, we've got sock sell right here, and we're holding on to that stop. We've got our stop, we've got our targets in place. Right now, still looking the way we want it to look, and hopefully we get that push. These pushes can come very fast. So hopefully we get that push and get to take profits. And then we have TZA, which is right around 1033. Entry was at 1090. Initially, stop was at 1020. But now that it's a hedge, there really is not a defined stop. So if you have to have a hard stop put in, I would put it in a little bit looser here, because we're using it now not just as a trade, but to balance other things. And we need it there. In case the market goes down, at least we, the stuff we get stopped out of, at least we balance it with TZA going up if the market goes down. So we need to have that TZA position on, because we've got 3 longs now. Now, I haven't taken high risk with the longs. So the longs, even though they're 3 positions, I would say the way we've risk controlled them, that it's really only like 2 positions. For example, Apple entry today. What do I like about Apple entry? The pullback here. First of all, we know it has good earnings. It's just sensitive to China. That's why it's taken this big drop. Otherwise, it was on a tear and ready to go higher. Now it has crossed the 9. This looks like a rubber band setup. Rubber band setup is something that's beaten down, ready to bounce, and could potentially cross this resistance level and start to run here. So it's very low risk. I only took 100 shares and about 5 or 6 points, so essentially risking only 0.5%. So it's really like a half a position right now. It's not a full position. But if it does come back here and get to 205, 20 points here, that would make it a 4-to-1 on my risk. So really, I only need to be right, 25% of the time here to break even. If we're right 50% of the time, we're coming out way ahead on a setup like this. So that's the idea here. Low risk, high reward. So what if I lose, 500? We have the potential to make 2,000. So that's the idea here behind Apple. And then FSLR, we've been talking about solars showing relative strength, now starting to bounce strong here. So we are playing for a breakout of this range. And we're, if the market were to make a little bit of a run here, I think FSLR is set up very nicely as a relative strength stock. So that's the idea behind these things. Now, if the market tanks tomorrow or over the weekend, these things will get stopped out, but we have that TZA in, which will likely pop if that happens. So I think we're in a good spot right now in the way we've positioned ourselves. the idea is here, at the least, we don't take huge losses, but we have potential for good gains. So that's the idea of how we're positioning ourselves here. So I know I got a couple emails, and I assume when two or three people email me, it's on more than two or three people's minds that, we're in three positions now. But remember, the way the risk control was here, it's not really like three positions. It's more like two positions here. And then we have balance with one TZA, so it's almost like just one long position if you think about risk and how we're playing this out. So, and this is part of swing trading, is managing all this stuff, figuring out the strategy behind how you're controlling your risk, how you're managing your trades, not just setups. I still, there are a ton of good setups, especially in software. I wanted to take Apple, and my decision was, do I take FSLR, or do I take these potential high flyers like in these software stocks? The reason I was hesitant to take the software is, if I took software, now we're increasing the risk, because while it can run really fast, if they do get hit, they could get hit really hard. And I'd have to put on another bearish position to do that, to feel comfortable. So I decided to go with something which I felt was a little more easier to control on the risk side, which is FSLR and Apple here. So that was a strategy behind what we were doing here. Let's take a look at some of the stuff that ran today. One of our focus list stocks, SFIX, was a really nice breakout, but very weak close. Even though it's up 14%, we don't like where it closed there. Oil, UWT, nice move today. I got a lot of questions about oil today, but just not enough of a reversal candle here to enter. Snapchat, we've been talking about it, but it was too extended at this point. Then Tesla's one I got a lot of questions about. Tesla, you could trade the same way as Apple, basically. Low risk, good chance that you could get stopped out, but you're risking so little for such a high reward that it's okay. And then I'm not going to go through all our stocks here. Basically, everything else is pretty much the same. Software stocks have been running. We have some retails that are beaten down that we could potentially trade if we get reversal patterns. NVIDIA I like, but we're already in SOXL, so I chose Apple instead because NVIDIA is a semiconductor stock. I was thinking about Lulu as well, even though it was red today. I like where it is in terms of low risk, high reward. I was thinking about Ulta today, but decided it's better to wait for a 50-day moving average break. So for tomorrow, what are we going to do? Not sure if I would add a position tomorrow. If I do, I'd probably hedge it with a bearish bet as well. And if something happens overnight now, and tomorrow, we have a big pullback, or over the weekend we have a big pullback, I will look to add in terms of, if we got a big pullback and looked like we were failing at the 50-day moving average, I will add an index short. And you guys know what index shorts we're looking at. They're in the report there, essentially either SQQQ, SPXU, SOXS, which I'd lift SOXL and reverse to SOXS, or FAZ here. So there are some potential plays with the inverse index ETFs if we start to see potential failure tomorrow. So that's the plan. Always, this is what we're doing right now, but if this other thing happens, what do we do? And this is what we do. We would add on some bearish bets. So that's it for the trade report today. If something significant happens, I'll talk to you guys tomorrow. If we put on a trade, you'll get the alerts. Otherwise, I think there's a good chance this is how we're set going into the weekend.